Hey, what's up? Welcome to Degen Ed. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is of Nikola, ticker symbol NKLA. And so here we are looking at the weekly time frame. So these are the weekly candles. And what we can see is that for last week, closing the week on February 9th at a price of 72 cents, Nikola does look like it is putting in a dragonfly doji, which could suggest a reversal. And since we have had a couple green weeks, it is quite possible we could be seeing a pullback over the next week. But also, it does look like buyers have been stepping in with that big tail down there. So it's quite possible we could be, at a level where we do continue higher. But with the previous week, we do see also this big wick up. Sellers are getting out above the current price. So, it does seem like there's a little bit of indecision, but we might see a big move over this week. And this Dragonfly Doji does suggest that could be to the downside. But yeah, I'm just going to go over some levels on the daily time frame that I do think should be helpful for navigating the chart. And so here I've got, all of these lines up here. I did do this Fibonacci retracement last week, did adjust it to the actual high here that was formed on January 31st, being a high of 79.88 cents. And so I do think that will be pretty key, that retracement as far as identifying levels. And I do want to point out that the 618 that I went over last week at a price of 66.51, that was hit on Monday, February 5th, when we hit a low of 66.2 cents. So just barely piercing that level. But that was, it does look like a good dip buying opportunity, as we did not see a revisit of that price over the course of the week. And just before I get into more levels, I do actually want to remove them so we could just look at a couple signals that we do see in the candles. And so one was last week on February 1st, we did see this bearish engulfing candle followed by a drop. And then this week on Wednesday, February 7th, we saw another bearish engulfing candle, and we haven't really seen a drop following that. So hopefully that's negated. But if we do, see in the weekly time frame that Dragonfly Doji could suggest that this bearish signal has not played out yet, and we could be seeing lower prices. And with that, since we did respect the 618, the next possible level to the downside that could be acting as support would be the 786 at a price of 62.88 cents. So do look for that. There could be a bounce from that level if we do go lower, and then it could be returning to 66.5 cents or possibly back to current price. So that could be a dip buying opportunity. So just something to keep in mind. Do note, though, that returning to the top of this wedge here could be bringing price down to around 58 cents. So, do keep that in mind. That would be a full retracement of this Fibonacci coming back down to 58.25 cents, or this red line that I've drawn at 58.4 cents. So just something good to keep in mind. But if we do not see a pullback, if we do not see a retest of the 618, key levels to hold price above, definitely going to be 70.5 cents, marked by this orange line. We did see a couple closes below that during the course of last week, but they were not consecutive closes, so we were able to consolidate over that week. But if we do start to see multiple closes below 70.5 cents, or especially this Fibonacci level here, the 50% retracement at 69.06 cents. If we do see multiple closes below that level, that could suggest further downside, like another retest of the 618, and what seems likely is a return to the 786 at 62.88 cents. So keep that in mind. But I do think that, this uptrending line that I've drawn here, that dashed line, let's see, going back to the low in June 2023 before this big run up. So that being one pivot point, and then this other pivot point here in December 11th. that we are currently above that level, as well as the orange line at 70.5 cents and the 382 at 71.62 cents. So hopefully we get another close above 71.62 cents. But what I could see is starting the week off with a red candle, pulling back potentially to the 50% retracement, and then maybe moving further down over the course of the week. But, of course, there is possibility that we do show some strength above kind of this confluence of these levels. If they do hold as support, we could be moving higher. I'd like to test 74.5 cents or the 236 at 74.78 cents. So really do look for multiple closes, multiple consecutive closes, either above or below these levels that would suggest confirmation that they are either acting as support or acting as resistance, and we might be moving lower following those closes. So do keep that in mind, but those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and subscribe to the channel for more videos like this. Thanks a lot for watching.